The major economic crisis facing the West's leading economies isn't seen to be much of a problem in Ghana. But if Europe and the USA, our major trading partners, are in trouble, surely that must mean something for us. Are we really insulated from the global economic crisis? The crisis dates back to 2005-2006, when the housing market crashed in the US. What began as a mortgage crisis has escalated into a major financial crisis that today threatens the economic stability of the world. Razia Khan of Standard Chartered PLC.
The banks are in trouble. They're not lending. They're starting to sell their assets. So there's not necessarily that impetus to provide new growth to the economies. They look as though they're going to be facing substantial losses. And because we're not seeing European policymakers actually behaving in a way that they could get ahead of the crisis, it's causing great uncertainty for everyone.
Not least of all, Deputy Minister of Finance, Seth Terkper.
We tap the global financial markets as a government. Our businesses tap the global financial markets, and we are part of the global markets.
The fact that Ghana is classified as a small, open economy makes the country particularly vulnerable, he says.
Open means that when you export your cocoa, when you export your gold, when you export your timber, you don't always have control of those prices because you are not big enough. In addition to not having control over your export prices, you also don't have control over the import prices. So you are left sometimes vulnerable, exposed.
The other reason why we are an open economy is because of the fact that we have very little capital controls. So when people make money in Ghana, you can repatriate without difficulty. The third reason is also because of the fact that increasingly we want the government to get out of business. So the privatization trend has really intensified. And because local people don't have enough capital, most of the investment in Ghana is now controlled by foreign investors.
And given the current contraction in lending by foreign banks, this could have serious repercussions for local development.
We sit in this country expecting people to come and invest in our mines, in our agricultural systems, etc., etc. These people must raise the money somewhere. And if they are not being lent money, then they can't come and invest here.
There are other dimensions. When credit is not available in the advanced countries because of the crisis, demand in the advanced countries for goods and services goes down. And to the extent that we export to these countries, that's another way in which our economy is affected.
And as foreign governments grapple with their own domestic crisis, Ghana could well see a reduction in the grants and concessional loans it receives, money that funds roads, harbors, schools and hospitals. Lead economist at the World Bank, Sebastian de Suze, puts a different spin on it.
Foreign direct investment might be lower. Remittances from Ghanaians from abroad might be lower. And the ability for Ghana to sell its exports might be lower. So obviously, in the long run, this is not good for Ghana, this is not good for anybody. Fully agree with you. I'm just saying that in the short run, we have not felt so much the impact. Ghana will experience very rapid growth this year. It's actually experiencing an economic boom.
Skeptics dismiss the doomsday scenario, pointing to the fact that commodities, gold, cocoa and oil are at an all-time high and that the Ghanaian economy is outperforming most others in Africa. But economists warn that the commodities boom isn't going to insulate us from the gathering storm.
Gold is doing very well, but there are lots of issues about how meaningful has that actually been for Ghana's foreign exchange earnings, not just on paper, but in reality. How meaningful has that been for Ghanaian fiscal revenue? Lots of questions that need to be answered around that. And cocoa prices, this could be a key one to watch. Having seen the CD price of cocoa that's paid to Ghanaian farmers rising to these very positive levels, how is the government going to sustain that necessarily if cocoa prices should start to decline?
Take timber, for example, one of the country's leading foreign exchange earners in the past. Today, the industry is on the verge of collapse.
I'm not seeing very clear the future, and we are really worried. We are having sleepless nights.
Havedis Jagalien is managing director of Kumasi-based Logs and Lumber, a highly successful company that has been supplying timber to the American construction industry since 1967, the 2008 crisis hit the company hard.
Now they are talking about going into recession again in Europe. If this happens, I mean, we will be obliged to cut shifts.
With serious consequences for its workforce of 1,300 people. Warehouses full of unsold stock tell the story.
Our stocks are over 6 to 7 million euros. Suppose we have this money now in our hands, we can solve all our problems. We can solve our problems with the banks because we are not also able to meet on time the loan repayments.
This is the basic problem with the analysis of how the crisis has impacted Africa. Partly it's because we see things happening and the headline growth rates are back, so everyone says, hey, you know, Ghana's pulling double-digit growth again, things are not so bad. But in many countries, and Ghana would not be alone, there's this hidden cost to the crisis where some sectors are just not doing as well as they were pre-crisis. And while that might be masked by the emergence of wholly new sectors, there's still a very substantial human cost associated with it.
The advent of oil has catapulted Ghana into supposed middle-income status. But again, economists advocate caution.
It will not sustain growth. I mean, it's a one-year effect when suddenly you have growth in your, you add the oil sector to the economy. It was not there before, suddenly pops up, and so it has a quite important effect, but it's one-off. It will not be sustained.
In the initial years of oil production, it's the oil companies that get recompensated for what they invested in the exploration, and the really substantial revenues that would accrue to the government of Ghana only come through after a while. The big mistake that people might make is thinking that oil is a game changer from day one. It isn't necessarily.
If you are producing around 100,000 barrels of oil compared to a country like the UK, which produces nearly 2 million barrels a day, or compared to Norway, which produces almost 4 million barrels a day, and you are an African country and a struggling African country, then your inflow of wealth is so small that the likelihood that oil will transform your economy is almost non-existent. However, what oil can do is put you on the map. People hear about your oil find and they hear about you in the financial press. All of a sudden, there's a focus on Ghana. Now you have the opportunity to market other things which may not be as well marketed by international multinationals like Tal or elsewhere, but may be very, very lucrative.
Cocoa should not be forgotten, mining should not be forgotten, industry should not be forgotten just because there's oil on the scene.
Given our pressures and our burdens and our problems, if we don't harness all the resources we have internationally and locally, forget it.
What we're arguing is that as much as things are looking good in Ghana now, because Ghana is riding this commodity price boom, as much as things are looking good because oil is there, part of the picture, we should not lose sight of what needs to be done to result in transformative growth in the other sectors as well.
Yes, it's a boom. The oil is coming, but we shouldn't lose the fact that we are an agricultural country. And the thing that will be sustainable in Ghana is agriculture.
Ruth Ajay is general manager of Blue Skies, best known locally for its fruit juice. But juice is just the tip of the iceberg. With an annual turnover of £35 billion, Blue Skies exports packaged, fresh-cut fruit to 12 major supermarkets across Europe. Just 48 hours from harvest, their produce is on their customers' shelves.
That's our competitive edge.
And the market is huge.
We use about 120 tons of mangoes on a weekly basis. So we are looking at almost 500 tons of mangoes in a month. That's what we use all year through. And if we don't get the mangoes from Ghana because it's highly seasonal, then we import from all neighboring countries that we can get mangoes from. We get from Senegal, we get from Gambia, we get from Ivory Coast, we get from Burkina. We go as far as Brazil, and even we've gone to Israel before to get mangoes to be able to supply our customers.
International demand is high, and there is significant opportunity for local farmers.
Are we moving fast enough? Are we seeing the critical areas that we need to help and how quickly we need to help them? Is the government aware of the challenges that the smaller ones have to be able to come up to also be competitive? That's the ones that I think we need to be looking at.
While government drags its feet, foreigners are coming into this country and are buying up vast tracts of fertile land to feed their people. Why is Ghana not feeding the people of the world? It's time to recognize the fact that agriculture, not oil, has the potential to transform our economy. The future is in agribusiness.
We have the potential, for example, for shea nut, for cotton, all over. up north, SADA, as part of the SADA strategy. Why should we export it? Why can't it feed, our factories, our industries, our cocoa? Are we getting to the point where, yes, we may export, but are we getting to a point where we export only 30, 40, 25% and put it into manufacturing?
The path to development and the path to increased resilience to this, volatility is diversification. Okay, diversification means innovation. Okay, form of innovation, exploring new sectors, new activities, new domains. Okay, that's how you grow. That's how you acquire competence.
It's really about questioning things and saying, what is the best way forward? Spending on education? Absolutely, it's needed. Development is about getting the right human development skills in place, getting the right amount of human capital in place. Spending on healthcare? Yes, it's needed. But at the same time, do we want the state to be overly involved in the economy? We know that that has caused considerable problems for Ghana in the past. Look at the rising NPLs in the banking sector. Look at state involvement, state-owned banks having exposure to the energy sector, and how that kept on causing problems for the Ghanaian economy. If you look at the development of the country, the development of the country's financial sector, Ghana stands apart from other countries. Yes, foreign investors have, until recently, been hugely involved in the Ghanaian bond market, but compared to Kenya with a yield curve that goes out to 30 years, Nigeria with a yield curve that extends to 20 years, Ghana only has a yield curve that extends to 5 years. Why? And why aren't the opportunities being created for the Ghanaian private sector to really scale up with that sort of enabling environment?
How do you manage a programmatic, a clearly systemic, a methodical transition from government being the driver to the private sector, where one, the private sector have never had capacity, and two, the government that's supposed to build the capacity has been declining in capacity. So that is why we had a situation where almost everything was done by donors. Most of the thinking in this country has been done by donors. Our so-called strategic blueprints, national development plans, since the last 2 or 3 decades, all of it has been done by donors. Most of them with consultants who don't understand the cultural settings in the country that we live in. So we have a huge capacity shortfall across the country. And how we address that will partly solved by education. But I think a lot of it will be solved by harnessing all the resources, particularly the human resources we have locally and globally, and forgetting about the stupid partisanship that prevents us from coming together and addressing our problems.
Amidst all the uncertainty, one thing is clear. A seismic shift is happening, not only in power relations, but in the way the world thinks.
What has definitely occurred is clearly greater humility about what constitutes capitalism. People used to think that they understand what capitalism meant. Now it's quite obvious that it comes in different forms and different flavors and different shapes. I think what happened in China is largely capitalism. Some of it is state capitalism, some of it is crony capitalism, and different forms of capitalism. The West didn't recognize it as capitalism. And obviously it's become obvious, all of a sudden we're caught, off balance.
There are no two ways about it. The West's economic power is on the wane, and the world's paymaster of tomorrow is China. Sebastian D'Souza, World Bank.
China is the first client of the World Bank. So it's a very important partner, or it's a very important country for the World Bank, also not only as a client but also as a member of the board.
The fact that there's competition alone is very important. I mean, competition is remarkable. Now the Chinese are here, so the Americans know, the British know, the World Bank knows that there's competition. That alone improves our bargaining situation. The challenge with the Chinese situation is that people assume that it's easy money, which is not. Look at Liberia. Since 2009, they have been waiting for $2.6 billion from China to revamp their iron sector. It hasn't happened. And every time you talk to the Liberians, they are frustrated because they think once you sign a paper with the Chinese, the money should start flowing. The Chinese are very tough negotiators.
Difficulties aside, the BRICS, Brazil, Russia, India and China hold the key to new markets, new partnerships and the realignment of trade.
We've seen some commodity producing economies where suddenly the demand that they're seeing from emerging markets in Asia has become much more important. We've seen, for example, China-African trade in general scaling up over tenfold in less than a decade.
But again, a word of caution. Deputy Minister of Finance, Seth Terkper.
Remember, the BRICS are part of the global system. And remember, for example, the strongest of the BRICS, China, 2 years ago, no, a year ago, had to put in its own policies because there can be contagion, and they know it. You know, we're talking about demand. Most of the demand for the BRIC exports is in the advanced countries. Much of the BRIC exports, for example, China, goes to the US. And remember what we said, if there is a dampening of demand, our cocoa will be affected. The same way, if there's a dampening of demand in the US, as has happened, you know, Chinese exports are affected.
Even for developing Asia, they too are very much exposed, having exported their way to economic development and having exported their way to the mature economies. So nowhere is going to be immune to a global economic slowdown.
So I don't think that we should also overlook the fact that the BRICS are part of our topic for discussion. They are part of the global financial crisis. And in as much as they are part of the solution, they are also looking at the likely impact of the global financial crisis on, you know, their, you know, policies and their economic performance.
That said, government is still exploring avenues of engagement.
We are doing a lot, you know, to promote exports between ourselves and the BRICS. That is increasing. It's not just one way, otherwise we'll just end up, you know, importing. So we are doing, you know, a lot in, for example, in relation to Brazil, much of the cashew activity that is taking place in the BA and the North, you know, is linked to, you know, Brazilian firms, you know, where the export goes because they have a very, you know, vibrant, you know, economy. We do export, you know, cocoa now to China, including even the cocoa that was used to back the BUI, you know, loan facility, for example. And the ultimate is to bring in BRICS to invest in our country. For example, Petrobras, you know, of Brazil, you know, has deep sea experience in exploration because most of their oil and gas is offshore, and which is similar to what we have. So we are engaged with Brazil in that bilateral discussion to see if we can share the Petrobras, you know, experience and for them to come.
Razia Khan, Standard Chartered.
We still have a situation where, despite the gains of the new trading partners, much more trade with China, much more trade with Asian economies generally, the substantial chunk of Africa's exports is still directed to the Euro area primarily, or the US.
As they say, make new friends, but don't forget, you know, the old. Because the EU will recover. I don't think that it's in the interest of EU governments, you know, to let, you know, the meltdown continue.
The jury is still out on that one. And another verdict, surely in the balance, is the West's blind faith in the value of the free market system.
Suddenly you got the countries that were the big proponents of leaving everything to the markets, letting markets resolve things, finding that the whole thing had exploded and they were in a very bad situation because of it. And then for the ordinary person in Africa, they look around and they say, well, which are the economies that are in good shape? It's China that's only slowly making its way out of its communist model. It's India, which has had great state involvement in the private sector for the longest time. You know, in India there was probably a very conscious effort to create national champions, and these are the things that African governments have been told not to do. So hang on a second, who should we really go with now? I think the reality is that it's not likely to be that easy.
But when all is said and done, what does this mean for Ghana? It depends on how you look at it.
Ghana is very dynamic, people are very dynamic, voters are very demanding, so the government has to deliver, and I think this is very positive. It creates a mood for, you know, for action.
But will Ghana rise to the challenge? Perhaps it's time to face some home truths.
You remember 1992-93, they said Ghana was going to take off, and then sometime in the late 90s, early 2000s, Ghana was going to take off. As late as 2006-07, under the previous administration, people thought Ghana was going to take off.
Ghana is at the crossroads, and it's time to take a critical look at the facts. We pat ourselves on the back as pioneers of African independence. We congratulate ourselves on our political stability. But what do we have to show for it? Joblessness, poverty, crumbling infrastructure, overpowering debt, and endemic corruption. While we trumpet our oil find, industries languish for lack of power. While Kenya exports billions of dollars worth of food to Europe, Ghana imports chicken, maize and rice. It's time to burst the bubble of complacency.
The notion somehow that Ghana is overly blessed and all we have to basically do is fix a few things and things will just take off, I think is not entirely accurate. And I think therefore that the government and other stakeholders have to become much more humble about fixing our problems methodically.
The oil developments have been a good thing, but Ghana needs to start thinking much more ambitiously about how to take advantage, full advantage of this, to really drive itself to the next stage of development. It's not enough to sit back and say, hey, 50-something years ago at independence, Ghana was at the same level of development as Malaysia and South Korea, and Ghana kind of slipped behind and the other countries went ahead. Now is absolutely the time that there needs to be clearer thinking, not just about how to deal with the immediate crisis, but about how to make those developmental leapfrogging jumps that are going to take the Ghanaian economy to a much more sustainable, developed position.
Wise words that we ignore at our peril if we want to stay afloat in an increasingly competitive world. Join us again next month.